my first reaction would be to distinguish between growth and inflation. Uh, I'm very concerned at the level of of money that we have dispersed. I'm very concerned about the level of debt that we're taking on to support it, and so I'm not. I'm expecting growth to be at a better rate than what we have seen so far, but I don't know when you deduct inflation, whether that's really going to be much of an improvement.
So the Federal Reserve, as you know, particularly Chair Jay Powell, keeps saying it's transitory. We're going to have inflation. He says we're going to have inflation, and we're seeing it already. As you know, you're seeing some of the corporate returns.
We're seeing it all over the place. I don't think, I mean, you read about lumber prices, but, we're seeing it in all of our businesses. I mean, the obvious bottlenecks in the supply chain arena are pushing up prices. There's just, it's very reminiscent of the 70s.
So you are an exceedingly shrewd investor. If that's your view about the risk of inflation, how does that change your investments right now?
Well, I think everything that you're doing, has to include the assumption that costs are going up. The fact that there is a shortage of employment. Whether it be home building or many other industries, they can't fill the jobs that they have. We've created a welfare society that is really discouraging people. When you can make almost as much or more by collecting unemployment insurance and supplemental this and supplemental that, that's pretty dangerous stuff. And clearly we're having trouble getting everybody back into the workforce because the alternative is so attractive.
So with a concern about inflation, at least the possibility of inflation, does that drive you into certain assets such as commodities, such as real estate, some of the traditional ways that you avoid it, or for that matter, gold?
Well, I think that the whole issue of fiat currencies is a very real issue. The United States is not the only country in the world that's printing too much money. Obviously, that one of the natural reactions is to buy gold, which I've actually done for the first time in my career, and it feels very funny because I've spent my career talking about, why would you want to own gold? It costs, it has no income and costs to store, and yet when you see the debasement of the currency, you say, what am I going to be able to hold on to? In the same manner, I think all of the discussion about cryptocurrencies are all in response to the whole question of, are fiat currencies going to, diminish the value, and will they be a non-store of value going forward?
Sam, President Biden has not only gotten some stimulus done and proposed a lot more in terms of infrastructure and other investment, he also is proposing some fairly substantial revisions in the tax code. We don't know what's actually going to become law, but let's assume for the moment that it becomes law the way he's proposed it. What ramifications might that have for investors?
I would say sell short. If all of his proposals were actually implemented, I think it would grind the country to a halt. I think that increasing the tax burden supposedly on the 1% has never been limited to the 1%. And in fact, all that investment capital we're talking about has to come from the 1 or 2%. I think that if we increase taxes at the level they're talking about, I think the eleemosynary world would suffer dramatically. I think that we don't really realize how dependent we are on private donations to support the cultural part of our life. But when you raise capital gains taxes and double them, as an example, it's going to have an enormous impact on capital money available for that. In the same manner, when taxes are high, enthusiasm for taking risk goes in the reverse, because ultimately, every piece of risk is connected to a piece of reward. And if you materialize, when you double the capital gains tax, you eliminate half the reward. So if you eliminate half the reward, it's quite likely you're also going to, eliminate half the appetite for risk. And frankly, that's not how our country has grown. And I think it'd be very deleterious going forward.
Let me argue the other side of it just to get your thoughts on it. Some people would say a lot of the gain that's been realized in recent years has been because of very accommodative monetary policy, which has driven asset values up. And then we have fiscal stimulus, which is driving asset values up. So a lot of that benefit has actually come from government intervention, and there should be some redistribution because we do have great and growing wealth and income inequality. How do you respond to that?
Well, I think that, growth in income inequality are facts. The question is, how do you respond to that under the assumption that that kind of inequality is not healthy? One way you could quote unquote respond to it is through redistribution, which is the methodology that the Biden administration has gone forward with. Personally, I believe redistribution is a one-way street going the wrong way, and that the real only answer is growth. And that what we got to do is we got to create and perpetuate environments where growth increases. We got to create and perpetuate environments where people want to take risks, where people want to start businesses, where people feel that there is opportunity for them to quote unquote make a spread on their ideas and on their investments. That's what growth is all about. That's how this country was built. And I don't believe that shifting to redistribution is ever going to be a formula that's going to work. I mean, we tried that with Obama for 8 years, and we had 8 years of substandard growth because there was such a focus on redistribution that we discouraged growth. And ultimately, growth is what we have to have in order to change the kind of wealth disparity that currently exists.